What if the single biggest financial mistake you could make right now is looking at the current silver price and thinking it is normal? Because here is the truth that the mainstream financial media is not saying out loud. The price of silver today does not reflect the world that exists today. It reflects a world that is already gone. A world before a U.S. naval blockade locked down the most important oil corridor on Earth. A world before China issued a direct military warning about that same corridor. A world before the IMF slashed its global growth forecast this week and warned that a recession is no longer a tail risk. The repricing of silver has not happened yet, but the conditions that make repricing inevitable are already locked in. And when a repricing happens in a market as small and as tightly wound as silver, the move to $100 is not a dream. It is arithmetic. Welcome to Money Insights. Hit that subscribe button and give this video a like right now, because today we are walking through the exact case for why $100 silver is closer than almost anyone in mainstream finance is willing to say publicly. This is not hype. This is not a prediction designed to get clicks. This is a structured argument built on historical precedent, current market data, and the geopolitical reality unfolding right now in real time. Stay with me, because every piece of this matters. Let us start with the most important concept in understanding where silver is going, and that concept is repricing. Repricing is different from a normal price increase. A normal price increase is gradual. It happens over months as supply and demand slowly shift. A repricing is something different entirely. A repricing happens when the market suddenly realizes that the current price is based on assumptions that are no longer true. And when that realization hits a small, thinly traded market like silver, the adjustment is not gradual. It is violent, it is fast, and it leaves the people who are not positioned watching from the sidelines in disbelief. Silver has been priced for most of the past several years based on a set of assumptions that included a relatively stable global energy market, a functioning international trading system centered on dollar-denominated transactions, moderate industrial demand growth from green energy, and central banks that were tightening monetary policy to control inflation. Every single one of those assumptions has now been shattered in the span of a few weeks. The U.S. naval blockade of the Strait of Hormuz is active right now. China has publicly warned the United States not to interfere with its vessels. The IMF has cut global growth forecasts and is warning about stagflation. And central banks globally are being forced to choose between fighting inflation and supporting growth in an environment where a military conflict is doing both at the same time. The old price of silver was built on a foundation that no longer exists. That is what repricing means. And that is why what is coming is not a gradual increase. It is a step change. Now, let us talk about the actual path to $100, because the number means nothing without understanding the mechanics. Silver closed out 2020 at around $26 an ounce after briefly touching $29. It ran to nearly $30 in early 2021 during the retail silver squeeze before pulling back. In 2023 and into 2024, it made moves toward $30 and briefly beyond. Each of those moves was driven by a partial version of the story that is now playing out in its full form. Each time, one or two of the bullish factors were present. Right now, for the first time in the modern silver market, virtually every bullish factor is present simultaneously. And the one factor that was never present in any of those previous runs, an active military blockade of the world's most critical oil corridor, combined with a direct U.S.-China confrontation over that blockade, is present now, and it was not present before. The path from current prices to $100 follows three distinct phases, and understanding those phases helps you understand both the opportunity and the timeline. The first phase is the safe haven surge. This is already beginning. When geopolitical crises of this magnitude erupt, gold moves first and silver follows. Gold has already been making historic moves this year. Silver's safe haven catch-up trade to gold alone, based purely on the compression of the historically elevated gold to silver ratio toward its long-term average, implies a silver price significantly higher than where it trades today. If the gold to silver ratio simply reverts to its 50-year average, the math on silver's price target is already striking. This phase can happen quickly. Safe haven repricing in precious metals historically occurs in weeks, not years. The second phase is the inflation and monetary debasement phase. This one has a longer runway and is actually more powerful than the safe haven trade for silver's ultimate price target. Here is what is happening right now in the monetary system that most people are not connecting to their silver holdings. The conflict in the Middle East is costing the United States roughly $1 billion a day, according to congressional estimates. That money does not come from a surplus. It comes from deficit spending, which means it comes from creating new dollars. Canada has already suspended its federal gas tax to help consumers cope with rising fuel costs. European governments are preparing similar subsidy programs. Every government in the world that is absorbing the economic shock of this energy crisis through spending rather than austerity is adding to the global money supply. And every dollar, euro, pound, and yen that gets added to the global money supply is a vote for higher silver prices. Hard assets absorb monetary expansion. That is not a theory. It is the oldest financial relationship in recorded history. The third phase is the industrial demand explosion. And this is the phase that takes silver to levels that would have seemed impossible just a few years ago. We are in the early innings of the most significant industrial build-out in human history. The global transition to solar energy, electric vehicles, and electrified infrastructure requires silver in quantities that the current mining industry is structurally incapable of supplying at today's prices. Solar panels require silver paste with no commercially viable substitute. Electric vehicle charging infrastructure requires silver contacts and circuit components. The 5G network build-out requires silver in its hardware. Medical technology, defense systems, water purification, and advanced semiconductors all require silver. Global silver demand from industrial applications has been hitting record highs year after year. And here is the critical supply-side reality that changes the arithmetic completely. Approximately 70% of all silver mined globally comes as a byproduct of mining for other metals like copper, lead, and zinc. That means silver supply cannot simply be turned up in response to rising prices the way a dedicated silver mine could theoretically increase output. The supply response to higher silver prices is slow, constrained, and structurally limited in ways that most commodity markets are not. When inelastic supply meets accelerating demand in a tiny market, the price does not increase proportionally. It reprices. Now, let me give you the number that makes $100 silver not just possible, but arguably conservative. The total silver market, meaning all the silver traded globally in physical form, ETFs, and mining stocks, is tiny compared to almost any other asset class. We are talking about a market measured in tens of billions of dollars at current prices. The US stock market alone is measured in tens of trillions. Global real estate is measured in hundreds of trillions. The global bond market is measured in hundreds of trillions. Gold alone has a market capitalization roughly 80 to 90 times larger than silver. When institutional investors, central banks, and sovereign wealth funds decide to increase their precious metals allocation even slightly in response to the kind of geopolitical shock that is unfolding right now, the capital that flows into silver does not need to be large in absolute terms to be enormous relative to the size of the silver market. A fraction of 1% of global institutional capital rotating into silver would overwhelm current supply and drive a repricing that would make $100 look like a milestone on the way to something higher. Here at Money Insights, we think it is important to be honest about the risks, because the investors who build real wealth are the ones who understand both sides of the equation. The path to $100 silver is not a straight line. There will be violent corrections along the way. Silver is one of the most volatile commodities in the world. A 30% correction in the middle of a bull market is not unusual for silver. It is practically guaranteed. The investors who capture the move from current prices to $100 are not the ones who buy and check the price every day. They are the ones who buy with genuine conviction in the thesis, hold through the corrections that will test that conviction, and do not confuse short-term volatility with a broken long-term argument. There's also the diplomatic resolution risk. If the Hormuz situation resolves through negotiation, if the US and Iran find a framework that allows the blockade to be lifted, there will be a relief rally in oil and a corresponding pullback in precious metals safe haven demand. That pullback would be real, and it could be sharp. But it would not change the monetary debasement story. It would not reverse the industrial demand story. It would not suddenly make silver fairly valued relative to gold at a historically extreme ratio. A diplomatic resolution removes one tailwind. It does not change the direction of the wind. So what is the actual timeline for $100 silver? Honest answer is that nobody knows with precision, and anyone who gives you a specific date is guessing. What history and current conditions together suggest is that the move to $100 is more likely to be measured in 1 to 3 years than in 1 to 3 decades. The last time conditions this favorable aligned for silver, in the late 1970s and early 1980s, silver went from under $5 to nearly $50 in approximately 2 years. The conditions today are in several key ways more structurally compelling than they were then because the industrial demand component did not exist in 1979 the way it exists now. Solar panels were not a mass market technology. Electric vehicles were science fiction. The green energy industrial complex that is now consuming silver at record rates was not a factor. Today, you have the 1970s monetary and geopolitical story, plus an industrial demand story that has no historical precedent. That combination is what makes $100 a realistic target rather than a fantasy. Here is what Money Insights wants you to take away from today. Silver is not priced for the world that exists right now. It is priced for a world that no longer exists. A naval blockade is active in the most critical oil corridor on Earth. China and the United States are in the early stages of a direct confrontation over that corridor. The IMF is warning about recession and stagflation simultaneously. Government spending globally is accelerating to absorb the economic shock of rising energy prices, adding to the monetary base in ways that history tells us end up in hard asset prices. Industrial demand for silver from green energy is growing faster than supply can respond. The gold to silver ratio is historically elevated, pointing to dramatic silver undervaluation. And the silver market is so small relative to the capital that could flow into it that even a modest institutional reallocation produces outsized price moves. $100 silver is not a prediction made in hope. It is a conclusion reached by following the evidence that is in front of us right now, today, in April of 2026. The repricing has begun. The question is not whether you believe it. The question is whether you are positioned for it before the crowd figures it out. If this gave you a framework that changes how you see silver right now, please hit the like button and share this video with someone who needs to hear it. Subscribe to Money Insights for real-time coverage as this situation continues to develop this week. We have follow-up content coming that goes even deeper on the gold to silver ratio mechanics and exactly how to size a silver position for the environment we are in. You do not want to miss it. Stay sharp, stay positioned, and we will see you in the next one.